I would also say that for people who feel that they've missed gold, once they see silver starting to run, they will probably go and buy silver for two reasons. It's been left behind, as you put it. And the second reason is that, it's a lot easier intellectually to buy something worth, say, $35 rather than something like $3,500. So I think, I think it will attract quite a lot of investment interest on that score. So, things like silver ETFs and so on and so forth. I think you're going to see a lot of demand in the future going via that route.
In today's markets, silver is the forgotten sibling of gold, traded like an industrial input, dismissed by most mainstream investors, and strategically overlooked. But that perception may be on the verge of a seismic shift. As veteran analyst Alasdair Macleod points out, silver's time in the shadows could be ending, not because the metal itself is changing, but because the monetary system around it is unraveling. When investors feel they've missed the move in gold, silver often becomes the next target. Psychologically, it's easier to justify buying a $35 asset with upside potential than a $3,500 one that already ran. This makes silver a magnet for latecomers to the gold rally. Add to that the looming global demand for silver-backed ETFs and strategic stockpiles, and the setup is clear: a historically underpriced metal sitting on top of growing monetary and industrial demand. The crowd hasn't noticed yet, but they will. And when they do, the re-rating won't be gradual. As Macleod suggests, much of the silver buying will flow through financial centers, not factories, hinting at monetary repositioning, not just manufacturing demand. For years, China has quietly accumulated silver, exploited the Western suppression of the precious metals market, and shipped just enough to keep the illusion of balance. But now, the logic of price suppression no longer serves them. The dollar is weakening, and silver, like gold, is becoming a tool of financial sovereignty, not just a shiny byproduct of mining. This is your early warning. If you're paying attention to silver now, you're ahead of 90% of the market. In this video, we'll break down the suppressed truth about silver markets, China's silent role in accumulation, and why investor psychology may trigger a silver rush in the months ahead. Hit the like button, subscribe if you haven't already, and turn on notifications. Let's dive into the truth behind silver's silent breakout.
As I say, we've got this dollar-based system. If we're allies of America, we're not going to tell the Americans, look, this is absolute rubbish. You've got to go back onto a gold standard. Apart from anything else, it would require a proper audit of, gold in Fort Knox and then the various other centers. In other words, the 8,130 odd tons, which the Americans say they've got, has got to be established as being a true figure. The other problem is that the New York Fed, which acts as if you like, the vaulting agent for earmarked gold, which was what they call earmarked gold, which is gold held in New York for foreign central banks. There's no doubt that they have been leasing gold out, and not only have they been leasing it out, it has gone from their control, from their premises, from their vault, and there is a shortage of gold there. And we've got no direct evidence of this because government refuses to tell us. But you have to ask yourself, why was it that Germany had such trouble getting some of its gold back? And we're only talking about 300 tons of their gold sitting in the Federal Bank of New York. They were initially told it would take 7 years to get back. Why? It's their bloody property. They weren't even allowed to go and inspect it. So there's definitely something very fishy going on about gold reserves in that country. So I think generally, it's something we just cannot deal with. We're not in a position to handle it. So if you see what I mean, there is absolutely no way we can deal with this problem.
Yeah.
Whereas, Russia and China have prepared themselves because they knew this was coming.
Mm-hmm, mm-hmm. What about Basel III? Is Basel III setting up a new gold-backed monetary system? What's your take?
No, it's not. Not at all. I think there's quite a lot of misunderstanding about this. Basically what they've said about gold is that it's a high quality liquid asset. But the definition of that has got nothing to do with where it sits, if you like, in terms of being an asset, a risk asset on a bank's balance sheet. So therefore, I mean, if you know, when it comes to the Basel III calculation, there are all sorts of things that are high quality liquid assets. You've got government bonds, obviously you've got cash, you've got bank deposits or reserves, if you like to call it, bank deposits of a central bank. You've also got corporate bonds, you've got equities. Anything that can be sold easily and quickly is a high quality liquid asset. But the haircut as a HQLI that you suffer on gold is 85%. 85% in terms of the funding on the other side of your balance sheet, the other side of your balance sheet being liabilities. So, and that gives you your tier assets. The tier one asset obviously is equity, you know, equity which is actually on the balance sheet, and obligations, loans from you know, diverse loans. For example, from many small deposits. You find that, you know, because we now assume that people don't queue up around the bank when they get worried about the bank's liquidity, basically, if you've got lots and lots of little deposits, that is better than having a few big depositors. So, you know, this is the way in which the Basel III does the calculation nowadays. Now, I mean, you know, I keep on reading people saying, well, you know, gold is going to be a tier one asset from July in America. No, it's not. It's an HQLA. I mean, it's a tier one asset. I mean, no, it's just not the case. What has happened is an exception has been brought in, and this is very much after lobbying by the London Bullion Market Association, whereby a bank which actually holds gold as an asset doesn't have to take that 85% haircut in terms of its funding requirement, so long as that gold matches a liability on the other side of the balance sheet. In other words, gold is covering a gold paper liability on the other side. So, for example, a bullion bank might offer a facility whereby you can open an unallocated gold account. Now, the way an unallocated gold account works is that no gold is allocated to it. You do it, it's not your property, it's the gold's property, and instead of the credit, the deposit being, let us say, in the form of fiat currency, it's actually in terms of gold. So you can demand settlement in gold. Therefore, the bank has to have a balance of gold against the possibility that its customers might demand a settlement in gold. Now, you can then see that if you just have bullion as an asset matching those liabilities on the other side, it makes sense. And that, therefore, is effectively outside the calculations, if you like. So that's what that is about. It's a major, it is a major and sensible step forward. But that's already in the works. I'd be very, very surprised if that has any impact on the American banking system at all. Because apart from anything else, their banks operate in places like London. They can do their balance sheets wherever they are, really. It doesn't matter.
What we just heard is not speculation. It's a deep crack in the architecture of the dollar system. Alasdair Macleod highlights a key point. The gold reserves of the United States, officially recorded at 8,130 tons, have not been independently audited in decades. More critically, much of the world's gold held in the New York Fed on behalf of foreign central banks may no longer be physically present. With Germany facing a bizarre 7-year delay just to repatriate 300 tons of its own gold, the message is clear. There is far more going on behind the vault doors than we are told. Further complicating matters is the role of Basel III, the international banking regulation designed to mitigate systemic risk. While some have speculated that Basel III is setting the stage for a gold-backed system, Macleod debunks that idea. Gold is classified as a high-quality liquid asset, HQLA, but it still suffers an 85% haircut when banks calculate funding risk, unless it's directly matched against gold liabilities like unallocated gold accounts. This nuanced but crucial regulatory treatment subtly reinforces the role of gold as a store of value, even if it's not officially being restored as money. Yet, it's not just about America. As the US clings to its opaque reserve system, Russia and China are positioning themselves with increasing transparency and intent. They're accumulating gold not for tradition, but for transformation. And that brings us to silver, the other metal that's been strategically suppressed, but may now be staging its breakout moment.
The way to look at silver is that it's not being priced as a monetary metal at all.
Yeah.
It's being priced as an industrial metal, and even in that context, the price has been manipulated. In my opinion, the main manipulators of the price have been the Chinese, who are what, third or fourth largest producer in the world, maybe fifth, I don't know. But for a long time, they have been bringing in silver doré from other nations and refining it, because refining is a dirty business. Nobody else wanted to do it. It was also a costly business, and the Chinese were very happy to accumulate silver. So I think they've accumulated a lot of silver, which basically nobody knows about, or it hasn't been really recorded. And it's allowed them to, if you like, put it this way, hedge their positions in the market. So the silver they buy in the form of doré doesn't go through the market, is priced relative to the market. It doesn't actually go through the market. So there's no sort of supply and demand consequence of that. But it does mean that they can hedge the price in order to suppress the price. So what they do is they come in as a producer through a major bank like JP Morgan, and they sell futures to suppress the price. And JP Morgan probably, again, I'm assuming, probably has instructions from the Chinese to try and keep the price down. So the dealers on the JP Morgan desk will look at the current situation, whether the longs are in there, and whether they can shake them out by hitting the market with some more shorts, hedging positions from on behalf of China and so on. It's been very effective. So much so that if you look at the Silver Institute's numbers, they reckon over the last 5 years or so that silver has been in supply deficit. I mean, this is not something that can go on forever. And again, you see the Chinese. You've got to think, it's all going back to China. If you put yourself in the Chinese shoes, and you sort of look at it from their point of view, the dollar's now going down. They can see that. They've worked that one out. Because believe it or not, the People's Bank of China has overall responsibility for the buying and selling of silver as well as gold. So it's basically the same people. And if they think one thing for gold, they're bound to be thinking the same thing for silver. Where this matters is that China will now be thinking, why should we supply silver into the market to keep the price down? Silver going up or whatever, it's the dollar going down. We've got to accept that fact. So you can see that things are changing for silver, and I think they're probably changing quite rapidly underneath. The other thing I noticed, which was very interesting, was in 2023, which were the last full year figures we had. I think the supply deficit, according to the Silver Institute, was something like 250 million ounces or whatever. Interestingly, China's exports of silver were almost exactly that figure. And not only that, but in 2023, the exports went to Hong Kong, Singapore, London, financial centers, not manufacturing centers. So I think that was confirmation of my theory that actually it's the Chinese who've been behind the price suppression. I would therefore go further and say that, in my view, it's no longer in their interest to suppress the price. So when the shorts on COMEX, for example, or in London, sort of fully realize this, I mean, they don't want to get caught, because it's a very illiquid market from the point of view of what they're doing. They will continue to try and manage the price down so long as they got short positions. Now, I would also say that for people who feel that they've missed gold, once they see silver starting to run, they will probably go and buy silver. For two reasons. It's been left behind, as you put it. And the second reason is that, It's a lot easier intellectually to buy something worth, say, $35 rather than something like $3,500. So I think, I think it will attract quite a lot of investment interest on that score. So, things like silver ETFs and so on and so forth. I think you're going to see a lot of demand in the future going via that route.
Silver, often referred to as the poor man's gold, has for too long been mispriced, misunderstood, and misrepresented. What Macleod uncovers is nothing short of a coordinated, long-term strategy by China to accumulate silver quietly, refining Dory silver off-market, suppressing its global price through derivative positions, and exporting just enough to maintain appearances. But that game is nearing its end. The evidence is compelling. China's silver exports in 2023 almost perfectly matched the global supply deficit, and those exports went not to industrial hubs, but to financial centers. This suggests a repositioning, perhaps even a quiet admission that the real value of silver will soon need to be recognized. As Chinese authorities step back from price suppression and global shorts are left exposed, silver's suppressed value could finally explode upward. As history has shown, monetary resets don't happen by decree, they happen by necessity. And when faith in fiat fades, it's hard assets like gold and silver that reclaim the stage. If gold has already made its move, then silver is the silent runner ready to sprint. For investors and everyday people alike, the message is clear. Understand the system, watch the signals, and don't be the last to act. If you found this video informative, please like, share, and drop your thoughts in the comments. Do you believe silver is the next big play? Have central banks lost control? Subscribe for more no-spin insights on money, markets, and power shifts. Until next time, stay informed and stay sovereign. Thanks for watching.